my name is Nico, and today we're going to discuss multi-time frame analysis to improve our trading accuracy. Multiple time frame analysis means that we look at a specific asset over multiple time frames. That means that if you are trading on a 1-minute chart, means we're also going to watch a 5-minute chart, and we're also going to watch a 10-second chart. Or if you are trading 5-minute charts, maybe we're going to look at the charts on both sides of that, which will be 15 minutes and 1 minute. It doesn't matter what time frame you're on. Even if you're doing forex trading, higher time frames, it doesn't matter. We have a primary time frame. This is the main chart that we base our decisions off. Then we have a secondary time frame, which is a higher time frame than our primary, and we're going to use this to get a broader view and some context of what price is doing. And then we have a tertiary time frame, and this will be a lower time frame, which we're going to use to for accuracy. Okay, so let's go to the charts quickly, and we can look at some practical examples and applications, and hopefully we'll get a couple of trades as well. So I usually trade like this, and then on my second screen I'll have more time frames open of the same asset. But for today's purposes, we are going to squeeze them in like this a bit, how we use the different time frames to determine trade entries for us. On the screen, I've got 3 identical charts. The indicators exactly the same on all 3 charts. I do have on the left hand side, this is a 10-second chart, this is a 1-minute chart, and this is a 5-minute chart. So the idea behind this is we're going to use our 1-minute chart, the center chart. We're going to use this to make our decisions on our trading decisions. We're going to use the 10-second chart on the left hand side. We're going to use that to try and get a bit more accuracy with our entries. And we're going to use the 5-minute chart to just get a broader overview of what's going on and keep that in mind. When you're doing multiple time frame analysis, one of the key things to remember is that we work top down. So we're going to start on the 5-minute chart. We're going to have a look at it. Then we're going to have a look at our 1-minute chart, and then we're going to have a look at our 10-second chart. We're going to look at 5 minutes quick. We use a higher time frame to determine what direction the price is going. And if I look at my RSI and my stochastic, we are currently in a bearish move. I know it doesn't look like that, but my RSI is staying below the 50 line, telling me there's more bearish momentum than bullish. My stochastic also hasn't yet crossed over the 50, the halfway mark to the upper side. And then also on the ADX, my DI minus is dominant at the moment. We are seeing more downwards movement than we are seeing upward movement. My DI plus is super low, while my DI minus is dominant. The last 3 hours, we have been primarily moving in a bearish direction. So we've been moving downwards the past 3 hours. At the moment, we're going to take this as a bearish trend. We are seeing signs that this might change soon. The 50 moving average is starting to move upwards. There's a chance that it might cross my 100 and eventually my 200 as well. So we'll keep an eye on that. But for now, past 3 hours, we have seen new lows, and we've seen lower highs, and that is by definition a bearish move. And we are going to assume, like I said, on the 5 minutes, we are bearish. What we're going to do now is we're going to use our 1 minute. We're going to use the trading strategies we use. So if you use different trading strategies, doesn't matter, but we're going to find entries from our strategy on the 1-minute chart. Once we see an entry opportunity, we're going to look at 10 seconds and see if we can fine-tune or get a precise point of entry for our trade. One of the strategies I use is trend or a bullish trend, but once we are in a well-established trend, I look for corrections on that trend, in that move, because we know price doesn't just keep moving in a certain direction. There's always corrections while it's moving, while it's trending. So one of the strategies I use is I will look for corrections, and then when a correction takes place, I watch my RSI. If my RSI doesn't break through the 50 line, in this case we are in a downwards move, so this would be a correction. My RSI tapped middle line, the 50 line, but it didn't break through. It got rejected and we're moving downwards still. So that's a continuation signal. And quite often when I get a signal on my 1 minute chart from one of my strategies, like I did in this case here, Quite often at the same time, I will get a trading signal from one of my strategies, sometimes the same one, sometimes a different one. But quite often I will get a signal on the 10 seconds as well. And I can use this to confirm and get an accurate entry point. In this case, on the 10 seconds, when this retracement happened, we got this massive push on the 10 seconds. And one of the other strategies that I use is I look for DI spikes on the ADX, where the ADX remains relatively low and we get a big DI spike. That tells me that this is a very big sudden move, but there's no strength or momentum behind it, and it's likely to pull back. And in this case, it did. But we're going to do that now. We're going to have a look and see if we can find some entry positions or entries for using multiple time frame analysis and see if we can find some trades. On the 5 minute, we can see we're pushing upwards. We do have the moving averages at the moment acting as resistance areas. Our RSI is on the 50, might reject. So I'm going to see if I can get, this was a sell opportunity. This is exactly what I mean with using multiple time frames. On 5 minutes, we approached a resistance area, and then on the 10 seconds, I got bearish divergence. So this was a trade opportunity we could have taken quick, but I did miss the entry. And if we miss an entry, we don't take trades late. If we take trades late, I'd rather stay out of it instead of taking a trade much too late in the hopes of it winning. Again, it doesn't matter what strategy you are using, but one of the reasons we really have to wait for entries or for your strategy to give you a confirmed entry is that if I jumped the gun and I took that sell here before we hit the support area, I would have lost a trade. Okay, so if I took it here for one minute, if I took a 1 minute sell there, this would have been a loss for me. But I waited for us to actually hit the resistance area. I waited for my divergence to form on the 10 seconds, that little stochastic jump, and I got rewarded for the patience and waiting for my strategy to actually give me an entry. If you remember when I said in the beginning of the video as well, we're going to use our secondary time frame, which is the higher time frame, and we're going to work top down. So because we are in a bearish move, that's why I didn't hesitate to take a sell trade when I got a trade signal on one of the lower time frames. I will be fairly hesitant to take buy trades at the moment because, like I've said, 5 minutes is predominantly bearish at the moment. My RSI is still struggling to get through the 50 line. It's staying bearish. It has been for quite some time. So until at least my RSI goes positive or goes bullish, I will be super hesitant to take buy trades at this specific point in time. Although usually this type of movement, I will prefer not to trade. We have bodies like this. So the bodies form a very, very small channel, but the wicks are all over the place and they are huge on the 5 minute. This is a little bit too much volatility to my taste. I know there's people that absolutely love this, but when a chart gets all over the place like this, I mean, if we look at the 1 minute, it's massive candles, ups and downs. So I am very cautious trading like this, especially the smaller time frames. When they start jumping around like this, I get extremely cautious. Multi-time frame analysis helps with a couple of things. First of all, it gives us a more comprehensive view of the market. Right, so if you like to trade 1 minute charts, keep an eye on the 5 minutes, maybe even the 15 minutes, and then one lower time frame as well. Actually, I don't think you should go more than 3 time frames, because if you start looking at too many time frames, you start to get overwhelmed with information. You know, it's information overload. But whatever time frame you prefer to trade on, just keep an keep an eye on the time frames next to it. So if, like I said, if you're on 1 minute, the next one will be a 5 minute time frame, and one before that will be 10 seconds. Keep an eye on those just to get an idea of the underlying, I want to say the underlying current. I'm not sure if that's the correct description. A better understanding of what is happening at the moment. Quite often you will open up a 1 minute chart and it will look super bullish, but then all the time frames above it is super bearish. That happens quite often, and then people keep on taking buy trades at that point in time, and they keep on losing and they don't understand why they're losing. Why the trades are going wrong. So keeping an eye on the overall, on the bigger picture is kind of important, especially on the shorter time frames that we trade, like like this, 1 minute and 5 minutes, especially if you're on the shorter time frames. It's crucial that you just have an idea of what's happening on the higher time frames, because it changes so quickly. There's a lot of distortion between the time frames. One might look, like I said, 1 minute might look super bullish at this point in time, but if you look at the 5 minute, it's clearly a bearish trend. The changes are fairly big between the time frames. If we do it this way, if we use multiple time frames, we get to align our trades with the bigger trends, and this improves our chances of actually winning. This will increase our win rate. If the 5 minute is busy moving strongly in a downwards direction, you will have a higher likelihood of winning your trade if you take sell trades on the 1 minute, because it's in the same direction as the major trend or the bigger trend. And if all your higher time frames, 5 and 15 minute, is strongly bullish, you will have much more accuracy, much more likelihood of success if you go if you're watching the 1 minute and you look for opportunities to buy. These opportunities to buy must still be in line with your trading strategy. Okay, so it doesn't mean our trading strategies are out the door. Just saying that if 5 minute is really bullish and the 15 minute is bullish, I will favor buy trades over sell trades on the 1 minute or the 10 seconds. Using a lower time frame will also give us a bit more accuracy on our entries. Well, we did get a trade entry using multiple time frames and how we can correlate them to each other. Hope you guys enjoyed it. Hope you guys found it useful. Thank you so much for watching. As always, guys, until next time, trade smart, trade safe, and have a good one.